All right, guys, welcome to a very big This Week in Crypto episode today. I'm your host, Brian. I'll be running it solo today. Maxim should be back next week. We will see how that goes, but I've got plenty of updates for you. Finish chewing here for just a moment. So, where can we begin after a huge week here? We had Bitcoin, of course, up here at 47.1K. It has jumped 10% now over the past week. Ethereum up about 9%. And you can see it's pretty much a sea of green outside of Monero here being the big outlier, dropping 27% after getting delisted from Binance. There was a pretty big impact from the crowd right away on this particular asset. Obviously, it's a very polarizing one with the privacy aspect that it has, used for what many perceive to be some shady dealings. And for whatever reason, that has caused Binance to stray away from it, and its price has been impacted as a result. But this episode will mostly be about the positives today, because that's what 95%-ish of crypto has done, is improve its market caps, find some much better results after almost 4 weeks now of disappointment after the ETFs were approved by the SEC. We did start to see a turning point right at the beginning of February. It was almost like a light switch went off, and we saw market caps begin to grow once again after Bitcoin was actually testing 40K and going below that just 2 weeks ago. So nice turnaround. And the question is why, right? We've talked about the ETFs quite a bit, and it might even be a bit of a laborious topic for many of you at this point, but it's still very relevant to what's going on in the markets. And very briefly, I'm going to go back to the ETF volume dashboard that we have here on Sandbase and is available to all of you. And then we'll look a little more at the price returns. So looking at the overall volume of the ETFs, what do we see? Well, obviously the opening day was one of the biggest days. That was when there was max hype around it. We also had one outlier day back on January 22nd, but you can see it's pretty much fluctuated back and forth ever since. Yesterday might have been, Tuesday. We don't have the full day yet today, but Tuesday, the 7th, Wednesday that is, that was when we had a massive day that might have hinted that we were going to be seeing some more price climbs. I've seen a bit of correlation here with prices moving up after ETF volume has had a particularly big day, and 2.5 billion in volume certainly was a big day. And with that said, the question is which ETFs in particular are seeing this inflow that's causing these volumes to rise once again. So GPTC obviously is still seeing outflows, though I will say that it's become much less substantial this week compared to what we were seeing throughout January, basically. IBIT is still up there. It's $412.8 million on Wednesday. The other big one, ARCB, is still seeing a substantial amount of volume, 203 million. Sorry, I've got to refresh that. Can you give me a refresh? Maybe it won't give me a refresh right now. For some reason, that's lagging behind. But you can see HODL is doing okay. It had a huge day on February 6th, going over $100 million for the first time. And it looks like ARCB, there we go. Yeah, it had $445 million yesterday in volume. That was its highest day in a little over a week. So the point is, volume is up for ETFs, and many people were starting to think there would be just a gradual downfall, but Wednesday proved us wrong. The 8th was a low day, but I still think that ETFs are having a dramatic impact on prices going higher. Like we said when the ETFs were approved last month, uh, it's going to change the landscape. There's going to be a different set of rules that are going to cause prices to fluctuate, and we may not have full on-chain data for ETFs the way we do for traditional real coin holdings, but I believe that a substantial volume is typically a good sign that there is more accumulation, more impact. Yes, sometimes volume is going to be a reflection of dumping, but overall, more activity is good. Just like we look at active addresses and circulation, which we'll check out in a moment. And I think we're looking pretty good here for the first time in a while. The question is, have we kind of gotten things a little baked in now with Bitcoin climbing 10% over the past week, and are we maybe in for a little short-term disappointment? So we can say that social volume is about even compared to the week before. Ethereum social volume is up quite substantially over the past week, and it made a milestone of its own, jumping back above Ethereum, jumping above $2,500 for the first time in quite a while. Binance Coin, XRP, they continue to slide in terms of discussions. Avalanche had a bit of a run just in the past day or so. It's still kind of trailing behind many altcoins, but the past day has been better. It's still not being talked about very much, so that could be a sneaky option for your portfolio right now. Chainlink still seeing tons of discussion, and so on and so forth. There are a lot of different stories out there. Solana about even right now, but that's been a highlight of the week as well, even though it started to drop off in the past day compared to other altcoins. So, oh, and last but not least, the overall market cap. I mean, up almost 6%. According to our 2,800 plus assets, the actual total market cap is up to $2.58 trillion once again. And that's trillion with a T. So that's a pretty impressive number. Screener volume up almost 50% in the past week as well, compared to the week prior. So that is a pretty substantial rise. And I encourage you to check out the screener more, look at leaders in development activity, of course, if you're trying to decide, which coins to disperse into your portfolio right now. It's a great place to start. Daily active addresses, look at overall trading volume. We've got our filter here as well. So any type of strategy you have, if you're looking for certain assets that are seeing high address activity, circulation, low MVRVs, things like that, it's all here. So that there's a reason I always start with the screener here. I think it's a great home base, whether you're a new or experienced trader. Now, moving over to our chart I wanted to start out with here on Sandbase. There is a big fluctuation in total open interest right now. This is essentially the amount of margin or leverage trades. And Baresh, I wanted to ask in the background if you could check on the drop here in open interest that we're just starting to see today. It's hard to tell whether this is accurate or not, but what we saw over the past week was this big rise in total open interest that went all the way up from a low on January 31st of about $7.47 billion, $7.15 billion, and peaked all the way up above $9 billion, and now is showing it's back down to $5.7 billion. So this could actually mean that there were tons of liquidations going on. I'm leaning toward this being accurate. And this essentially means we just went from a 3-month high to a 3-month low, just like that. And the shorts that have been going on here, you can see that there was a dip right here that started yesterday in funding rates. And these shorts likely had a lot to do with the rise to above 47K again for the first time in a month. This is a big deal. It looks like there's some very polarizing opinions right now that are absolutely driving the markets. Thank you for that, Bara. So he agrees. I think we believe that this is accurate. Um, and with this liquidation, I, I'm leaning toward the likely outcome for the short term being a little bit of a cool down period. But that depends on the crowd, right? Are FOMOers going to try to jump in now, thinking we're really on the cusp of going over 50K again for the first time in uh, almost 2 years, or is this going to be uh, continued shorts like we're seeing now? So I would really keep an eye on this metric. All good. All right, so we're back, folks. Yeah, that makes sense because it's zooming out. But even looking at the last year, uh, this drop still shows. So I believe this should be accurate, and if so, the total open interest. Go ahead. Yeah, yeah. So the total open interest uh, is back down to the lowest since October 1st or so. Uh, it's really about relative to what has been going on the short term. That's the way I look at this metric. So the spike here was showing that there were either lots of shorts or lots of longs, and that's why we compare it with this metric, the funding rates one. And then when we saw this drop off here, that's a pretty clear sign that there were some liquidations going on, and a lot of shorters were getting burned there. Now, previous patterns, when there's a big pump like this in Bitcoin, usually, especially when it's this volatile and this quickly, we see a lot of those profits start to get dispersed toward altcoins. So this is just based on historical patterns over the past 6 months. The typical outcome, maybe today and through the weekend, would be Bitcoin flattens out and altcoins start to churn and go ahead of Bitcoin for a very short term amount of time. Then we see a lot of traders get FOMO toward more speculative assets, and then we see a bit of a retrace. So we're on kind of the beginning of step two of that process for now. But like I said, it depends on how the crowd reacts, and there's never just a set pattern that you can always rely on. I'm just telling you what the historical outcome usually is. So that said, we've taken a look at open interest now. We've looked at funding rates. What about the overall health of Bitcoin right now? And we're going to look at Ethereum today as well. Before we look at the main on-chain metrics, let's look at the whales. So according to the supply held of Bitcoin wallets with anywhere between 10 to 10,000 BTC, a nice widespread of anything from small sharks to very large whales. And they make up in combined coins about 2/3 of the overall supply. So they're a really good test metric for how the large holders are feeling in terms of their confidence for Bitcoin. And clearly they still have a big peak here back in early December and have been moving down according to this green line in terms of their ratio of the supply held. We did see a bit of a rise here on the 4th, 5th, and 6th, and then it's kind of gone back down here on the 8th. So, if you're looking for tons of support from the sharks and whales right now, we're not really getting it. This was a pretty minor move, all things considered. And there are, alternate ways you can look at it. I did put out a post here. Let me see if I can see it. It's doing that thing where it archives just our biggest posts. I'll have to get us logged in on this browser so we can see some of our latest. Oh, you know what? I can do it this way. Just kidding. Look at our latest insights. I put out an insight yesterday about some of the largest, here we go, wallets holding at least 1,000 Bitcoin. So if we look at it from this perspective, I think this is really fascinating. We had a low here back in late January, and since that time, just the wallets with 1,000 or more BTC have really started to surge, going up about 1%, 1.03% to be exact, in terms of the overall supply being accumulated back into their wallets. Now, this can be a bit deceptive. We just looked at a line with 10 to 10,000 showing it's still kind of on a drop range. It's kind of declining, but the overall trend of just the 1,000 or more, when you're including like those giant exchanges that may not be true reflections of active traders, that's at least recovering pretty quickly. And you can see what happens when the 1,000 or more line is dropping. Obviously, prices are falling off a cliff when that happens. And you can see as soon as it flattened out, that's when Bitcoin started to recover. So I don't think it's a bad thing at all that this line is starting to go back up, but if we can have this green line start to match it, then we're really in business. But for now, not really happening yet. And you can see that in terms of dry powder, the amount of buying power or overall stablecoin holdings from wallets that have anywhere between $100,000 to $10 million in their wallets, yeah, they're still dropping pretty rapidly. And that's still a bit of a concern. There's a reason that we try to look at all three of these lines together. And the fact that they've all been kind of moving down over the past 6 months should still be a bit of a concern to you for the long run. If we go back to a year here, let's actually go back all the way to 2021 here. So you can see when there is a drop in Bitcoin from these particular holders, generally not good for the price, but you can see right here, this was when the FTX collapse happened in November of 2022. Prices did start to recover despite the Bitcoin line going down. And I think my theory is that the dry powder here with the Tether going up and even USD coin going up during this time had a lot to do with the bottom hitting despite Bitcoin not really being accumulated. So sometimes you might see the BTC line going down, but if Tether and USDC are going up, we can still see recoveries. But this right here since mid-October, that was mostly due to FOMO and positive speculation of the inevitable ETFs being approved. And we've seen the results of that despite not so great looking accumulation for stablecoins and Bitcoin. So I wanted to touch on that. We touched on open interest. Now let's take a look at Bitcoin's overall on-chain and social health at this time. When we look at transaction volume, let's look at just the last 3 months here. Make sure it's refreshed. Not really anything special going on. A few isolated spikes, but that's nothing new. We could look a little more zoomed out here. We'll just make these bars 7 days. Yeah, so this past week was actually the lowest amount of transaction volume we've seen in 3 months. So not the best looking outcome there. If we look at the other utility metrics like daily active addresses, still kind of declining as well. This is the 30-day moving average, and you can see it's kind of been treading water for at least the last month or so. Circulation, slightly better, very, very mild incline. This is the amount of unique tokens moving from wallet to wallet. And if we go to our NBT model here, yeah, February is actually showing a red bar once again. This would be the first time in 5 months that we're getting a bearish signal, but of course it's still early. This is just 8 total days of circulation versus market cap, showing that we've got a bit of a bearish divergence. But you know, we still saw 4 straight months of more encouraging NVT bars here. So, you know, the jury's still out on whether we can continue to climb. I would pay close attention to whether we're getting enough circulation, though. It is quite important to monitor. Now, how about MVRV, the overall amount of average trading returns for both the short-term and long-term traders here? So looking at the 30-day, as you would expect, average trading returns are up on this nice rise. On a 30-day scale, any address that has been active in the past 30 days, they're up about 10% overall. That is not quite in a danger zone. We look at about 15% as the spot that we're really starting to get overheated, and usually, corrections begin to occur. On the 365-day end, also quite high at plus 36%. This is the highest we've seen average trading returns in about 4 weeks now, with January 11th being the last time we got this high, and we saw what happened on January 11th. This, of course, was due to the, buy the rumor, sell the news impact of the ETFs being approved. But I would be a little cautious when we're seeing, the long-term MVRV returning to a point where we last saw a big correction. We talked about funding rates, whale transactions, nothing too crazy going on here. The $1 million or more transactions are essentially right where they normally are. Same with $100,000 or more. So whales, as we already kind of saw through the tier list, not really showing anything notable right now. And take a look at this. This is quite interesting. The ratio of on-chain transaction volume and profit versus loss is spiking pretty huge at the moment. If we go back to the last year, you can see that as of this moment, and this ratio will come down, but as of this moment, the ratio is overwhelmingly at a year high. And the last time we saw anything close was at the beginning of December, and that's where we actually saw a local top, and Bitcoin started to tread for a little while. So considering there is an overwhelming amount of profit taking right now compared to loss taking, I wouldn't be shocked if we saw a bit of a cool down period. It could be very short though, right? Like, it's all about timing. Are you expecting the amount of retracing to be something that is very temporary, or are you selling with the plan to not buy until Bitcoin hits 40K again? Because many people make the mistake of waiting too long to try to buy back in, and then they miss the train. Mean dollar invested age, also quite important. It has flattened out here since late January, the past 9-10 days or so. The average age in which investments have been sitting in their respective wallets has flattened out. It's not rising, which is good. We don't want to see the mean dollar invested age rising. That's a reflection of coins and wallets getting stagnant and less assets being circulated the way they could be, which is normally a driver for market caps continuing to rise. So we saw this long run of mean dollar invested age dropping, and we're at least showing signs that the activity of the dormant wallets are starting to slow down. We want to continue to see this line drop to justify that we're in a bull cycle. And yes, we may be seeing this rebound, but the rebound might be temporary unless we continue to see the dormant wallets move. We'll see if 50K or very close to 50K happens, because that may excite a lot of those dormant wallets and get them to bring even more dormant coins back into circulation. Realized profits, as you would expect, just tons and tons of high realized profits going on since the bull cycle started back in mid-October. It hasn't slowed down yet. A good sign would be if we see a little dip like this, like in November 30th. You saw what happened right after that happened. That would be a sign that there's some realized losses actually happening, but that's been very few and far between over these past 3 months or so. Supply and exchanges, we also updated everyone on yesterday. It dropped below 5.3% for the first time since December of 2017. That's a big deal. Basically, less and less coins are sitting on exchanges, meaning the risk of future sell-offs are pretty mitigated right now. And that's a good sign. If you're worried about a giant drop off at any given point, it can certainly still happen, but with less and less coins, that lowers the likelihood of that happening. So major outflows happening just over the past couple days in particular, where we saw about 0.08% of the entire supply of Bitcoin moving off exchanges as we get closer and closer to 5%. Going below 5% would be pretty historic, by the way. That didn't happen since, I think, November of 2017. And that was a much different time in crypto. I'll touch on these two momentarily. Let's look at the overall weighted sentiment for Bitcoin really quick. In fact, I've got a comparison tool here that looks at many of the top caps. So top cap weighted social sentiment. We're taking a look at the last 3 months and essentially seeing whether things are positive for the crowd or negative. Anything above this zero line means that there's more positivity than usual toward that asset. Anything less under the zero axis means there's more negativity than usual. So if we looked at just the past week here, almost every one of these top cap assets was seeing more negativity. So this bearishness kind of matched what we saw with the funding rates, where there were tons of shorts going on. The only asset that was actually in the positive was Ethereum, which as of right now, they're starting to see some pretty nice performance even compared to Bitcoin, climbing above $2,500. All of the assets so far over these past 24 hours or so since this cutoff happened are in negative range once again. Binance Coin just slightly above average. It's obviously seeing a lot less attention since the CZ exit a few months ago. But you can see Bitcoin, Ethereum, XRP, and Cardano, especially Cardano, are seeing more negative sentiment than usual despite this pump. So this is indicating that the crowd is really doubting this pump and thinks it's kind of a fool's gold kind of rise to get them interested, and they're not buying it, at least so far. But often when that happens, Bitcoin and the rest of the markets will continue to climb higher and higher, testing the patience of these skeptical traders until they jump back in and go, oh, okay, I don't want to miss out anymore. And once they give in, that's when the price goes down, because as we've talked about, prices typically move the opposite direction of the crowd's expectation. And if we also compare the ratio of, let's see if I can find that template. Yeah, here we go. Ratio profit. I want to see all of the top caps. Here we go. So look at this. Over the past 24 hours, there have been huge numbers of profit loss going on. It looks like, other than Litecoin, which is actually seeing low loss right now, this actually might be too much of an anomaly. But everything else is just skyrocketing in terms of profit taking. That might be a sign that we're going to see at least a short-term top here imminently. So I'd keep a close eye on that. The last time we saw something similar was back here in early December, and that's exactly when we saw that local top and ended up dropping back down. So short-term wise, bit of a concern. This is showing there could be some justification to take some profit, but like I said, if you do it for too long, you could miss the train. Okay, let's look at Ethereum as promised here. I'm just going to switch this template over to ETH. I think it's seeing some substantial isolated movement right now, so it's worth keeping an eye on just how healthy the ETH blockchain is at the moment. And it appears the transaction volume has been about as flat as can be lately. Really no giant fluctuations in either direction. Daily active addresses and circulation. Let's zoom in a little bit, go to 3 months here. Yeah, so in terms of the 30-day trend, we had been seeing quite a rise over the past month. People have talked about Bitcoin quite a bit, but as soon as those ETFs were approved, we saw plenty of discussion about Ethereum ETFs being next. So the amount of active addresses on the ETH network have risen quite substantially. Circulation also looking pretty good. It is kind of rising in the same fashion as Bitcoin, just a nice organic gradual rise. If we look at our NVT model specifically for Ethereum, it's still showing some bearish divergences though. I take it back. This is updating only through April. Let me see if I can update that really quick. Nah, I won't bother with it right now. I'll just prepare it for next week. I don't want to take too much time updating this model, but at least what we're seeing here, it's likely in kind of a neutral or maybe even semi-bullish range because circulation is rising over time as the market cap hasn't really been rising at the same level as Bitcoin. So I think overall the utility of Ethereum looks just fine right now. And on the MVRV side, it's actually looking a little bit better than Bitcoin. The average trading returns are only at about plus 5% over the past 30 days, as opposed to Bitcoin's plus 10%. And the 365-day returns are at plus 29%, as opposed to Bitcoin's plus 35%. So yeah, they're both still in the positive range, which means there's more risk in jumping into the asset right now. But there's a little less risk than Bitcoin, according to average returns. So there is a justification for swapping some BTC for Ethereum, at least according to, what the other traders are seeing the most profits in right now. Funding rate, yeah, there have been some weird things going on with Ethereum. On Deribit, there's these huge short spikes, and on Binance, actually BitMEX and Binance, which we'll just isolate for a moment, BitMEX is seeing some longs right now, which are a bit concerning. So unlike Bitcoin, Ethereum's funding rates are at the highest level since January 19th, which was unfortunately right before there was a big drop. You can see the even larger ones that happened back here in mid to late December that led to the inevitable early January drop as well. So I'd be a little concerned about the fact that people are getting a little bit of FOMO. It's not a massive spike, but it's enough where historically this could lead to, at least a halt of the climb above 2,500 that we just saw for Ethereum. Whale transactions, again, nothing too special there. I won't look at the whale tiers because it's just too deceptive for Ethereum. There's DeFi and staking that can really mix up what the true, whale activity looks like at any given time. But I still like to look at, I'll do this. I like to look at just wallets that have 100 or more Ethereum in them and just their overall trend. And it's not really great. It's at least flattened out over the past month, but if we go back like 5 years, it's pretty wild what the fluctuations do. They kind of dropped off substantially from 2020 to 2021, but there was still a huge bull run during that time. I'll add price to it. So you can see that it dropped substantially and then prices roared. Then prices started to correct and the amount went back up. And they've been kind of, ever since December of 2022, they've been declining once again. And since that time, of course, Ethereum's price has just about doubled, even more than doubled. So hard to get a ton of alpha there. I still think it's interesting that they obviously move in the opposite direction of where the trend is going. So with that said, I think we may actually be rooting for this line to continue going down in order to justify prices to continue. So unlike other assets, Ethereum's a little strange like that, where just looking at the 100 or more line, at least over the past 3 years or so, there's a bit of an inverse correlation there. And you can see the ratio of on-chain transaction volume and profit versus loss is sky high, just like we saw for Bitcoin. So that would lead to the argument that we might see a short-term drawback. Mean dollar invested age, we did see a bit of a drop. This was one of its larger daily drops in quite some time. Last one happened right when the ETFs were approved. So yeah, there's some dormant wallets definitely moving for Ethereum right now, but overall the trend isn't quite as exciting as it is for Bitcoin. Plenty of realized profits as you would expect as well. And unlike Bitcoin, so this is important, the amount of supply on exchanges is rising back up and has been that way for about 2 weeks now. Back on the 28th, the supply on exchanges was at 7.78%. Now it's way up to 8.13%. So this is one of those rare instances where Ethereum's actually doing something quite different than Bitcoin in terms of its supply on exchanges. I'm a little concerned about this rise. I think it's a lot better if you are continuing to see the network supply moving away from exchanges, meaning there's less sell-off risk. But this could be happening for a variety of reasons. I think the difference between Ethereum and Bitcoin in terms of its exchange supply has a lot to do with the ETFs. There are now 11 spot Bitcoin ETFs where people can go and get exposure away from exchanges now, crypto exchanges, while Ethereum doesn't have that same opportunity. So, of course, there's going to be a little more spread now that the entire horizon has changed for Bitcoin specifically, but not Ethereum and other altcoins. Social dominance, you can see there was actually a pretty big spike in Ethereum talk just 2 days ago. Wednesday was a massive day. And normally you would see a bit of a price drop when that happens, but Ethereum wasn't really having any sort of isolated spike during that time. So this could have been due to who knows what other reason. Maybe another influencer was talking about ETH substantially, but this was the biggest social dominance spike in about 3 months. So it is starting to get a lot more attention right now. And speaking of attention, let's take a look at what the trending tokens are right now. So right there in the window, we see Bitcoin and Ethereum at number 1 and 2. And the AI summary will tell us exactly what the increased discussion for Ethereum has been all about. Apparently, the Ethereum Dencun upgrade is scheduled to launch on March 13th, so about 5 weeks away. The upgrade is expected to bring blobs to the Ethereum mainnet and lower L2 transaction costs. So this is one of those times where Ethereum obviously is starting to get more hype and just crossed over 2,500, but its main hype is actually due to something on the technical side for its blockchain. So that's good. And overall, I think people are recognizing that, and it probably has a lot to do with why ETH has actually been growing faster than Bitcoin, at least over the past day or so. And of course, Bitcoin here at number 1. BTC ETFs have recorded their 3rd largest inflow day as the price of Bitcoin rises above 46K. So we saw that low spike on our dashboard here. If you refresh this on Monday or so, since there's sometimes like a 1 to 2 day lag, that's probably going to reflect that it was just below what we saw on January 10th and 22nd. It had a huge day of volume, and that's why it's been trending the way it has been, and likely why Bitcoin has risen the way it has. BlackRock and Fidelity's Bitcoin ETFs have accumulated more assets in their first month than any other US ETF launch in the past 30 years. Spot Bitcoin ETFs are becoming mainstream on Wall Street, with BlackRock leading the way. One fund plans to launch unique ETFs blending Bitcoin with traditional equities to attract a broader range of investors. So that's all sounding like pretty good news to me, and I think the price is reflecting that pretty immediately. Other assets that are in the top 10, we see Cody experiencing significant price surges and profits following the implementation of a privacy protocol upgrade. DYM, which has been trending on and off all week long. Users receive DYM tokens by staking TIA or Atom, so this is an airdrop related pump. FXS is actually dropping. It's one of the few that is trending right now due to a price drop, and there's confusion and lack of clarity about its value and purpose in the Frax ecosystem. This communication problem needs to be addressed soon, according to the crowd. So they're certainly concerned. Another dropping asset is Buy. People are interested in buying the token Buy. They want to know when and where they could buy it on exchanges in the future. That's an interesting summary considering its price is also dropping pretty substantially. So perhaps there is some very, very recent news that our AI summary hasn't even caught up with yet. We talked about Avalanche and Solana in our title of this video, and you can see they're both doing extremely well and trending once again. If we just take a look at Avalanche here really quick, it may not be showing a huge spike yet, but its price is certainly starting to, oh, here we go, that's why. So this is Avalanche's price, and since January 22nd, it was at $27. Now it's way up at 34 or 37, I should say. So it's gone up about 40% just in the past 2 weeks or so, 2.5. In terms of specific social platforms, they're all about even in terms of increased discussion. Let's also take a look at Solana, and then I'll actually take a longer look at Solana because we had a request for it in our chat. So Solana here, number 9, and also Cardano at 10, both seeing increased discussion. So Solana started to see a big spike in discussion all of a sudden here on February 6th, and then it cooled off right away. Telegram, Reddit, Twitter, and 4chan all saw that same spike, and it looks like Twitter in particular, /X, still not used to that name change. It is starting to see a bit of a rise in discussion, in particular, once again. Looking at my own price chart really quick. Yeah, Solana, it's at 105. It hasn't really done anything too special in the last 8 hours or so. Avalanche has, interestingly, but I think Solana is one to look out for. And why don't we just jump over now and look at the overall sentiment and the volume for Solana at this time. By the way, guys, continue to drop in questions. We've got about 10 to 15 more minutes here on the call, and I'd love to address anything you guys would like to talk about, especially during this exciting time. So looking at trading volume, nothing special going on, which is a bit of a surprise. I actually thought there would be a little more trading volume than there is, considering it has been trending throughout the week. And by the way, it's up to the number 5 slot now. If we look at just our rankings, it's Bitcoin, Ethereum, and Tether at number 1, 2, and 3, then Binance Coin, then Solana. I know it happened, I think, a couple months ago, but it passed XRP to get into the top 5, and it really just hasn't looked back. So volume has been mediocre, to say the least. Funding rate, if we zoom in here just to the last month, what do we see? So if we look at just Binance, yeah, it's actually, there's been pretty consistent funding rate. It actually is slightly in short range right now. That's why you're not seeing this bright green anymore. DYDX doing its own thing, but I think the highlight is Binance and the fact that it's kind of calmed down. The resting state is usually 0.01% and it's at 0.003, meaning there's not very much confidence right now that Solana can rise. And as we know, that means that there is a higher likelihood that Solana could continue to rise due to the crowd's lack of optimism toward it. And then if we look at the social status right now, so Solana saw, let me get this down to 2 hours, it's fine. So Solana saw this big spike in social volume. And I remember now what that was about. That was about the outage that happened at the beginning of the week and everyone's concern related to it. You saw this minor drop right here. Everyone suddenly says, oh man, Solana's network is down again. This has been happening every 3 months or so, maybe even more consistently. And that ended up being the bottom. So everyone showed some FUD right here. I shouldn't say everyone, but the crowd, the mainstream crowd began to talk about Solana in a negative light. And that actually launched its price upward. Since that bottom here, when everyone was talking about it, its price has gone up about 13% or so. So these are the kind of things you look out for when the mainstream crowd has a lot of FUD towards something and you have the risk tolerance to go against them. You often get rewarded, just like we saw right there. As of now, social volume looks like it's calmed down. So even though it's been trending, it's mostly due to, you know, this latest spike that happened yesterday after its price was really soaring and faked out all the people that had FUD at the beginning of the week. But as of now, it's not really on the radar anymore, even though the 24-hour trend shows it's still on the top 10. Weighted sentiment. So this is exactly what I'm talking about. Because of that, I'll do it more on a daily trend instead of a weekly. But because of that negative weighted sentiment, combined with high social volume, that was a high signal for buying the bounce, and it's still showing negativity as of now. And then development activity I want to touch on too. It really peaked here about a month ago, right as the Bitcoin ETFs were announced, and it's cooled down quite a bit. It's still getting plenty of development activity, and one of the higher assets out there. I'll even look at the top 20 or so. I believe it should still be part of the top 20. And we'll just go right down the list really quick. And thank you all, by the way, for being with us. It's awesome to continue to have our usual crowd here with us to watch our streams live. I know most of you watching this are watching on delay. We got probably 90 to 95% of you who don't watch live, but you still watch the stream. So thank you for joining for the market updates consistently like you are, and continue to follow and spread the word about us. It means a ton as our platform continues to get attention and becomes useful for more and more traders and analysts out there. So looking at the top developed activity assets out there for right now over the last 30 days, if we're looking at just a 30-day daily sample, we've got Polkadot and Kusama barely ahead of Cardano. They fluctuate consistently, and it's been this way for a couple years now. But as of now, Polkadot and Kusama just barely edged out Solana over the past 30 days for the top developed GitHub repository. They share the same repository. Cardano right below. Then we have Internet Computer, which is actually on the verge of surpassing Cardano. I've never seen any asset as close to cracking the top 3 as I see Internet Computer right now. So we could check in tomorrow and actually see that they've flipped. Optimism right below them. They're a consistent team that is in the top 10. Hedera as well, Status, Cosmos. Sui is a recent addition to the top 10. They have really churned along with their team, developing pretty hard and working on innovation. Ethereum in the top 10, which is good to see. They go in and out of the top 10 between 8 and 15 or so. Chainlink just outside the top 10 now. Vega, Aptos, IOTA, and Decentraland round out the top 15. I'm trying to see if Solana's here. No, Solana's actually dropped all the way to 22nd now, which is still fine. I mean, it's getting plenty of development according to this leaderboard, but it was in the top 15 or so about a year ago and has kind of declined a bit ever since. But if you're looking at any of these assets, you can be confident knowing that the team is of the belief that they're working on an asset that's going to be part of the crypto ecosystem for a long time, and that's what's important. If you're seeing confidence and uh, authentic innovation and efforts to improve from that respective project, it's usually a good sign, and should be a sign of confidence when you are considering including that asset in your portfolio. So that's a little development activity update. We touched on everything we could for Solana because it's not an ERC20, so we have a limited amount of data on it. But Baresh, are there any other questions or asset requests?
Yeah, let's start with reserve. The ticker is RSR.
Sure. RSR. So I don't know if I've looked at reserve too much. It's currently the number 319 asset on our market cap ranking list. Go back to the last 6 months here. Let's see what's been going on. So over the past 6 days, since its bottom on February 3rd, its price is up about 18%. So it's performing quite well, not the top asset by any means, but performing better than average. Transaction volume wise, you can see that there was a turnaround right when this spike happened. So I do see that a pretty good signal for a reserve would be a big spike in transaction volume. In terms of active addresses in circulation, it's been pretty low as of late, really nothing too special there. Same with circulation. You can see the 30-day trend shows that there's been a downturn over the past 4 weeks for both of them. MVRV. So both have been rising, understandably, with this 18% run over the past 6 days. 30-day wise, the average trading returns are at their highest point since January 3rd. So we're at about a 5-week high here in terms of returns. But overall, because it was so low, because it had dropped so much, the 30-day MVRV still looks just fine and would justify that prices can continue climbing without being in a danger zone for quite some time. And to add to that, the long-term MVRV is actually still in the negatives. So traders that have been active in the past 365 days, they're actually still down 7%, which looks a whole lot better than Bitcoin and Ethereum, which are both well over 25%. So ideally, there should be less risk being in reserve compared to Bitcoin and Ethereum right now. But that would, of course, depend on Bitcoin and Ethereum staying, afloat and not dropping off a cliff, because then all the coins would all fall with them. Funding rates, really no change at all. It's been flat and pretty ignored for quite some time. Whale transactions, quite low. We did see this spike, the $1 million or more spike right here. There's enough where that isn't too much of an anomaly, but you do see that it coincided with the uptrend. So I wouldn't be surprised if there was some accumulation from some key wallets right there. If we look at, let's see, the price is at 0.002. So sharks and whales are going to be starting probably about there. These are the smaller sharks. Whales are definitely moving up. That's a good sign. But the large whales are moving down. So the 100 million to 1 billion coin wallets are moving down. These are kind of like the millionaires, whereas the red line is like the 100,000aires. And they're moving in two different directions. If we just combine all of these together, any wallet that has a million or more RSR, well, they hold almost all of the asset, which is typical for an asset that's outside the top 300 market cap. It's substantially smaller than the top assets we normally look at. But yeah, 97.8% is held by them. We did see an interesting uptick right there on the 28th and 29th. I'm curious. I'm going to look at the alpha really quick between this line and its price. Yeah, so the rise didn't really happen until 3 or 4 days after this blip here. I want to go way back in time. Let's go back to just 3 years ago. Yeah, so it looks like it's pretty typical where they tend to accumulate as prices are dropping, and then they drop a little bit if the prices rise. But hard to say where the key alpha is. If we really try to isolate a few, just trying to see which line would be best to study when it comes to alpha for reserve. I would probably say the 10 million to 100 million, this one right here. If you just take a look at that line, it tends to correlate a bit with price, but there's no perfect answer for reserve, it seems, right now. Now also take a look at the ratio of profit to loss right now. Huge spike, the largest we've seen since the big top back on what looks like Christmas Eve. So be a little careful right now. We may be seeing something upcoming for reserve after its nice 18% rise in 6 days. Social volume and dominance have had some spikes. It looks like there was a fudge spike here at the end of January, and that was around the time when we started to see this turnaround. Then we saw one more spike here as prices started to erupt. So as long as social volume stays down, I think reserve can have a good run. If you suddenly see a spike though, and the mainstream starts to get FOMO toward it, then be a little careful. It does look like it gets some decent development activity, at least 2 or 3 GitHub activity submissions per day. That's nice to see. And its RSI is up at about 63 right now. 50 is average, so a little bit higher than we'd want to see, but nothing too scary yet. Also notice the total amount of holders has actually been going down, which is not a bad thing. That usually means that a lot of these small addresses are capitulating and giving up and looking for greener pastures right now. All right, so that's enough for reserve. I think we'll just take one more ball rush, and then I will conclude the stream for the day. So you want to pick the best one of the bunch.
Okay, let's go with curve, CRV.
Sure, we haven't looked at curve in a while. So what's going on with curve? It's currently outside the top 100, which is pretty recent for them. They were consistently in the top 100 for most of the past year, but they're now the 107th market cap ranked asset out there. And it looks like its volume, transaction volume, are all down. Daily active addresses and circulation are also down. So the utility for this Ethereum-based asset is really moving in the wrong direction right now. So I'm not surprised to see why its price has been kind of lagging behind. On the 30-day trend, it's at least up since February began. It's up about 10%, which is pretty modest compared to most other assets. And so the 30-day average returns are at about plus 1.5%. 365 are way down at negative 17%. So it's looking like there could be an argument for it being a buy candidate right now because its long-term returns are below most of the other competing altcoins in the top 150 to 200 out there. In terms of funding rate, pretty flat at the moment, really not much movement in either direction. Whale transactions, I'm not seeing any massive spikes here. And its price is currently sitting at 47 cents. So the sharks and whales are going to start right here with 10,000 or more. And it doesn't look like they've been doing too much in either direction. I'm just going to merge all wallets with 10,000 or more curve in them, which have been flat. Let's isolate a little higher and go 1 million or more. So curve, it's quite centralized, to be honest with you. This is assets that hold like $470,000 or more, wallets with $470,000 or more in their respective wallets, and they hold about 93% of the overall supply. They've been moving down for quite some time. Yeah, it's hard to see much alpha here. I mean, they're just going down constantly as smaller wallets are starting to pick up more of the supply, which there's nothing wrong with. But it doesn't look like the large holders are doing anything substantial. This is pretty common with staking and DeFi assets. Just like Ethereum, it's really tough to find the precise tiers that show alpha. We do see a big ratio in profit spike today, like we saw for others. Actually, it's massive for Curve, though, so I'd be extra careful. Even though it hasn't been rising substantially compared to other altcoins, that has still resulted in 8.5 profit-taking transactions for every one loss-taking transaction. So that's a bit of a concern as well. Dormant activity also continuing to go up. The average wallet for Curve has kept its investment for about 631 days. So that's quite high, and it doesn't show any signs of dormant activity. There are some realized loss spikes that are popping up that could be encouraging for a bit of a rise. But I'd want to see a little bit more of it, especially some huge ones like this would be a good sign. And supply and exchanges is also way up at 9.82%. This is the highest we've seen since May of 2021. So maybe not the best sign right there. Curve has some higher sell-off risk, especially if it crosses above 10%. That's usually not what you want to see for an altcoin, especially one that's usually known for staking and DeFi. Not a lot of discussion related to it. It's pretty much just waiting at its normal level. And weighted sentiment, let's zoom back into 3 months. Yeah, it's actually quite low, which is a good sign. There's quite a bit of FUD toward it, if anything. And there's a little bit of development activity. It's kind of fluctuating at its normal range right now with 2 or 3 GitHub activities per day. And its RSI is at about the same spot as reserve, sitting at about 61 right now, which is slightly above average. So I'm not seeing great signs for Curve, to be honest. Reserve looked a little bit better to me, but I'm interested to see how it plays out, especially now that it's outside the top 100 market cap ranked assets. Maybe there will be some event to jolt it back into the top 100, especially the MVRV. I think that is a good light at the end of the tunnel with average returns being so low. I also want to mention just all of the, it's not popping up right now, darn. I was hoping we could take a look, but I'll refresh this and maybe give an update on our Twitter/X later today so we can look at just the overall landscape, which I would guess is going to be pretty split between overbought and underbought now that we've had a pretty solid February performance for most of crypto so far. But that'll do it for today's stream, folks. I hope you guys enjoyed. Again, thanks so much for watching and spreading the word about our streams. We love getting our community involved in our videos and asking these great questions. If your question was not answered today, just do us a favor and drop it in our general chat on Discord, and we'll be sure to answer any pressing questions about your Santiment subscriptions or how to buy, how to focus on a metric, or just a question about the overall market. We're always happy to help. And on behalf of Balresh, who continues to do an amazing job running the streams, and Maxim, who we're hoping to get back on stream with me next week, and the rest of the Santiment team, thanks so much for watching, guys. Have a wonderful weekend, and we will talk to you soon.